This is John at AlgoFutures Trader, and just a quick video today celebrating the 4th of July holiday here in the US. But I wanted to talk about the importance of the open and why we focus on the open when we're talking about our opening breakout strategy. Again, this was a strategy developed by Tom Leeson, a hedge fund trader, using this strategy for the hedge fund that he trades for, adapting it for day traders in the E-minis and micros, and why this works. So I've got a chart here. This is the MNQ. This is just a daily chart, but I wanted to point out what you'll notice is the majority of time the opening price of the day, right, that 9:30 open, will typically be at or near the high of the day or the low of the day. All right, so for example, I've highlighted all the areas on the chart here where if you look at this first candle, the opening price, obviously we have a green candle here, so obviously the open is the bottom of the body here. That's where price opened, and it closed up near the top of the range. But the opening price was basically at or near the low of the day. What does that mean? Well, that means that if price is trading above the open, right? If the current price is trading above the opening price, you probably want to be long. So for this particular day, if you were long above the open, look what you could have captured, right? All that profit. The next day, look, the opening price was nearly the low of the day. It was almost the low of the day. And if you were long above the open, obviously if it's an opening breakout strategy and you're getting long at some point above the open, which we do, and we'll take a look at that in a bit, then being long above the open made complete sense, because the majority of the time, as you'll see as we go through these, that's the direction you want to be trading in, and it doesn't really matter. You can utilize this principle for whatever strategy. If you can just look where are you in relation to the open, that's probably going to tell you a lot about what direction you want to be trading in. Now this third day here, right, the open really wasn't at or near the high of the day. When we say at or near, it's got to be about 25% of the total range of the day. But the next day, look, the open here at or near the low of the day. Again, if we want to be long above the open, look at all the profit potential we had this particular day. Now typically, here's the next day, nothing there, nothing there. So in other words, the open was not at or near the high or low of the day, right? And you can go 2, sometimes 3 days, typically our maximum, before you get another day where the open, right, the open here, almost the low of the day, right? And here's your close, got as high, as the top of the wick here. So obviously you want to be long above the open in this case, right? Nothing here on the next day. Certainly the open was not at or near the low of the day, right? Same thing. Well, this next day, actually, the open was at or near the high of the day. It did trade, much lower, but it ended up closing, pretty close to where we opened. So that's a day, if you're trailing with a trailing stop, you can capture that profit as it did go, as it did decline, but you would have stopped out with whatever profit you had there. The next day, open at or near, it was at or near the low of the day, and so you wanted to be long that day. Complete opposite the next day, where the open here was much closer to the high of the day than the low of the day. The next day, you want to be long above the open because you could capture all this, right? Nothing here, nothing here. See, there's 2, sometimes 3 days might go by. Open here, at or near the high. You want to be short. So if price is below the open, you'd rather be short at that point. Open at or near the low of the day. Okay, the open here, this is a day you'd probably want to be short because the open is at or near the high of the day, and if your price crosses below the open, then you only want to consider short trades at that point, right? Complete opposite the next day. This is a day you want to be long because once price crossed the open, right, look what it did. That's all that range that you're able to capture, right? Really nothing here. It wasn't it wasn't this low here, or I'm sorry, the open here wasn't close enough to the low of the day. We want it to be at least within 25% of the range. But here, the open, right? So I think you get the point. Here's a nice one where the open was nearly the high of the day. And it's the day once the price crossed below the open, you want to be short. All right. So just on the small sample here, we were looking at 60% of the time, the open was at or near the high of the day or the low of the day. All right, so how does that look when we're talking about our breakout strategy here, our opening morning breakouts? Let me just pull in the NQ here. And this was Friday. All right, so Friday, if we go back to 9:30 a.m. here, right, here was your opening candle here, right, 9:30, and this was the opening price right here. So you can see that dotted line is consistent throughout the day. So you always can tell, is price above the open or below the open? Now we have this no trade zone between basically the green dash line here and the red dash line. That's your no trade zone because we have to have some kind of buffer. So notice all the trades that were went off, or all the signals that fired off during the day, were all to the long side. Right? We never broke out of the no trade zone to the downside. So we have that buffer in place so that you don't just get whipsawed above and below the open all day long if it's going to be a range bound day, so to speak. In this case, price broke out of the no trade zone and the stop goes below the other end of the no trade zone. Okay, and so you would be long all day, and that paid off, just like we talked about the principle. If price is above the open, you want to stay long or take long trades, and this is one you would just have held all day, and at probably around 1600 you may be just exiting at the end of the day and taking your profit. All right, so hope that's helpful, and maybe next week we'll take a look at some of the scalping templates that Tom has built. All right, so you guys have a great trading week. We'll see you in the Discord server.